in your money. If you are shopping for a car and you're in need of a loan, watch out. You could be stepping right into a trap.
It's the old saying, if it sounds too good to be true, it is, and that applies to loans as well.
Yeah, Jeff, you're here in studio with us. All right, so we knew it was with homes a few years back, so now cars as well?
Well, the issue is being addressed by the New York Times, and they point out that, yes, we have seen this happen before in the events leading up to 2008 with the mortgage crisis, but they're saying on a smaller scale, this is happening within the auto industry. They're seeing more and more cases where people are trapped with terrible car loans that are crippling their budgets, and the people being targeted are already struggling to begin with. Many have filed bankruptcy in the past, yet they are instantly qualified for whatever loan they desire. The big banks are making a huge profit from these loans, and there are other smaller banks that are described as being in cahoots with the car dealerships. Last year, Jonathan and Marcelina Mojica purchased a 2011 Hyundai Sonata. Their total loan payments will amount to more than $30,000. That's roughly double what the car is worth. And if you think about it, by the time they finally pay that thing off, they're going to be left with just a piece of junk. Their monthly payments are around $600. That's about twice what they were told they were going to pay. And bankruptcy attorney Charles Juntica says the banks know what they're doing.
The process works like this. They target the people who are struggling financially the most because they have the lowest credit scores. And they use that as an excuse to charge them like legal loan shark rates.
So people with bad credit and a history of bankruptcy like Marcelina are given subprime rates, and that's where the problem begins. In fact, Marcelina, who was interviewed by the New York Times, said she was amazed that she qualified for this loan. She didn't think it was going to happen. So what you need to watch out for is mail that is sent to you that tells you you're pre-approved for a loan. A lot of the times it comes in the form of a check with your name on it, not a real check. But it's a check that has this huge amount on it. It says you're pre-approved for this amount. You've probably seen that junk mail before. And you have to watch out for the terms that include that you're qualified even if you've suffered bankruptcy, car repossession, foreclosure, or all of the above. If it's too good to be true, you've heard that before, then stay away from it. The thing is, you get locked into this, and then it becomes a 21% APR situation, and that's why you just see it balloon out of control.
Well, when you hear that $600 a month car payment
on a Hyundai Sonata,
right?
That should be a red flag right there too.
Well, there are standards for a reason, and we as the consumer have to remember that. Even though we're getting approved for X amount, can I really afford it?
Yeah, and it didn't start off as $600. It started off as $250 or $300,
right.
And then it just increased from there as the APR went up. We see this with credit cards too, and we saw it with the home mortgage crisis.
Right. Well, and they say though, you need to, as a consumer, you need to know you want that fixed rate. You don't want it to change.
Well, they'll spell it out though, even if it is a variable rate. If you ask for it, they have to show you how much you're going to pay down the road. And unfortunately, a lot of people, they just don't think, I should get that.
They don't look at the
ignorance,
fine
not
print.
bliss.
Yeah.
Right. And it's just unfortunate they're preying upon people who are suffering the worst.
Deja vu.
Too bad.
Yeah.
Deja vu.
Yeah.
Thanks, Jeff.